Richard Yetsenga of HSBC believes that there's going to be a rate cut involved today. And Richard, a good morning to you. Interesting, I would ask you what kind of coffee you're drinking. But so the Bank of Japan is going to cut interest rates. Aren't they pretty much at zero?
They're basically at zero, but they've got 10 basis points. I think the point, though, is the Bank of Japan's under enormous domestic pressure, and so being seen to be doing things, in fact, this applies to lots of central banks, being seen to be doing things is almost as important as what they actually deliver. So a small rate cut, and then probably later this month some more, you know, I guess we're calling it conventional quantitative easing these days. Yeah. We're getting so used to it. Yeah,
that's right. They're going to increase their loan facilities as well. What was the number that you're estimating for this?
Well, I don't think the number's the key issue. In fact, it's not just the loan facility, but they may be looking at some other things. The key point, as I say, is that I think to back up their intervention stance in the foreign exchange market, there are these efforts domestically as well, and that's really what the government in Japan's looking for.
Okay, so if they're looking to cut minusculely the borrowing cost, the interest rate, what does that mean for the yen? Do you think there might be possibly some weakness?
Nothing directly, but I think to the extent it backs up this intervention stance and says they're actually quite serious about at least making sure the yen underperforms other currencies against the dollar, of course. Who really knows? And you're struggling to fight against very weak dollar forces. But I think on the crosses, they're looking for the yen to underperform.
Yeah. What about the yen? It's trading what, 83 and change right now versus the US dollar.
I think it's going to stay probably very stable. I mean, I think what you'll see is currencies like Korea continue to outperform. And in fact, we saw Shirakawa the other week speak about monitoring the yen against regional currency crosses, and if you think about Korea and Japan, Samsung and Sony, Hyundai, Toyota, very key competitors in many markets, and the currency, of course, is causing Japanese competitors a lot of problems.
Yeah, that's very true. But look at that yen, so 83 and change right now. What about 82? That seems to be the line drawn in the sand by the government itself. So isn't that what the market is expecting?
I don't think we'll see that in the short term. I mean, we can't rule out, I guess, in the next couple of months that the dollar yen eventually continues to decline. But I think so soon after quite a concerted intervention effort, it probably makes pretty poor press for them to let dollar yen go down just at this point.
You know, I spoke to Societe Generale right after those Toncom figures that we got last week, and they said they would see 80 faster than they would see 90 for the yen. What do you think?
No, I think we'll see 90 before we'll see 80.
Oh, really?
Yeah.
Okay, so you think the government will be forced to jump in here?
I think they'll have some success in the short term. I mean, intervention, of course, there's some questions about how successful it is over the long term, but if you want to achieve an FX objective in the short term and your actions are robust enough, then you can get there.
Okay, well, let me talk to you about another big mover. Have you taken a look at the Aussie dollar? I know you're from Australia, so going home might be a little bit more expensive for you, but 97 to the US dollar. Didn't I think HSBC itself took parity off the table?
We did
in the summer months.
In fact,
what about now?
We still don't have parity on the table, just on the view that there's probably still some cyclical risks from China, but I guess you can't argue with the price. And today we're debating again whether the RBA will hike rates.
And what do you think? Will they hike rates?
No, we think they'll wait a month. It's only a timing call, not a directional call. The rates still have to go up, potentially over the next year, quite a long way, but not today for our view.
Okay, not today. So they'll wait a month then before they move again. But what about the Aussie dollar itself? You still don't have parity on the table, but could there be some upside risk of that happening?
Sure. I mean, I think if the US dollar remains weak, I mean, if you think about the paradigm we've been in for the past month, where basically everything is dollar negative, weak US data's dollar negative, strong US data's dollar negative, Aussie's probably going to stay, you know, pretty firm.
Okay, pretty firm. So around these levels, what do you think the low will be for the Aussie dollar?
I think we could come off 2 cents in the short term, something like that. But it does look pretty firmly underpinned at this point.
Okay, Richard, I'm sorry it's going to be pricey for you to visit home then. Thank you for joining us this morning. Nice to see you. Richard Yetsenga of HSBC.